Hi, I'm Amanda Morrall, Personal Finance Editor with Interest.co.nz, and I'm here today with a double-shot interview with Fiona Whyte. She is a former FX salesperson with a large New Zealand bank, and she's here to enlighten us on why, on certain currency deals, particularly between Australia and New Zealand, certain customers are getting really burnt. And that was the case with one of our readers who did a freelance article for us this week and was a bit puzzled to find that when she transferred over quite a large sum of money that she lost significant amounts of it in Australia. So Fiona, this is, I understand, something to do with retail spreads, and they're particularly large in Australia as opposed to New Zealand. So what accounts for that gap? Why are they bigger in Australia than New Zealand, and why are we better off changing our money over here than in Australia?
Okay, I think what we've found over the last 5 to 10 years is that the New Zealand marketplace, particularly in relation to FX providers, is really competitive, and certainly there's a lot of people playing in the space here, so that's driven that competition is sharper pricing. And so I think in Australia there's not as much competition, and the banks are quite happy to put some wide spreads in there, even for their retail customers, or especially retail.
Yeah, well, we've obviously got a lot of New Zealanders living over in Australia, and then probably quite a few of them sending over money back home to either pay off student loan debts or other responsibilities that they left behind here.
We hope so.
So I think a lot of them would assume that the rates aren't all that different between what they'd get, and I think most people would probably be encouraged to transfer over that money in Australia into the New Zealand dollars, and wouldn't think necessarily to actually transfer that money over in Australian dollars through another means. So can you just review for me what other options people would have in terms of transferring that money over, and just, so not going with the sort of default setting of transferring it over into New Zealand dollars?
Sure. As you said, there's a lot of Kiwis in Australia, and some of them are sending money home to pay student loans, tax debt, that kind of thing. There are a couple of choices. I think people largely have realised or thought that there have been no choices, and look, the internet is fantastic to give you a bit of price transparency. So even just get on, your bank in Australia on their website, do a quick calculator. The FX calculator tools are there. You can see, okay, if I transfer this money through this bank in Australia and I'm selling my Aussie dollars, what the rate is and how much Kiwi I'll get, and then quickly pop onto their corresponding New Zealand bank site, go through the same exercise, and I think you'll find those numbers will speak for themselves. And it might be a couple of $100 here or there, but certainly when someone's working hard in Australia to pay back some debt in New Zealand, then it's certainly worth going through that exercise. So what you can do, and it really will depend on each bank and their own policies and criteria, is that you may be able to open a foreign currency account in New Zealand, and your reader had certainly highlighted that in your article as well. And so some banks are quite comfortable to have foreign currency accounts that you can then send the money from Australia. It arrives in New Zealand in Australian dollars, and then you can choose, and you understand the rate that you're getting to convert into your Kiwi.
Okay, and is there some options outside of the banks? Because a lot of people might feel comfortable going with the bank because they're, regardless of how much we might dislike them, they're a known enemy, so to speak. What else how about a third-party option?
Sure, there are a lot of non-bank providers operating in the marketplace, and they do provide very competitive pricing. Obviously, they're leaner organisations because they're only having to fund the costs of operating that small particular part of the business because they are specialists. And you don't have to sacrifice credibility or quality to actually deal with them, because the credible ones, if you get onto their websites, you'll see they have a page about regulatory frameworks, that they are authenticated with the New Zealand Financial Markets Authority, and also they may very well be members of the Financial Markets Association too, so you have got some peace of mind there.
Will you save that much more money by using a third party instead of going with the bank?
I believe so, and I think it's worth doing some of those exercises and checking it out for yourself. If you're doing small volume transactions, then obviously the savings aren't going to be as large, but from time to time people are buying and selling property between New Zealand and Australia and moving, and if you're getting into the tens of thousands, hundreds of thousands, it's certainly worth doing that exercise, because at the end of the day we are in a recession here in New Zealand, and a lot of people have got a fair bit of debt to pay down. Yeah,
fair enough. Now, in terms of consumer rights, what are the banks, either in Australia or New Zealand, obliged to tell you before you go ahead and push the transaction button?
Sure, and I think in the case of the reader, I suspect the error may not have been with the bank, but the people that she was actually third-partying through herself in terms of her own financial advisors, that the bank will tell you what the exchange rate is at the time. Even if you're walking into the branch and say, hey, look, I've got 10,000 Aussie, I need to send it to New Zealand, can you tell me what the rate is? They'll tell you what the rate is at the time, and they'll tell you how much Kiwi you would receive. So that's just a basic checkpoint that you can make sure you understand the rate that you've got at the time, so then you can decide whether you're happy with that rate or not, and then understand what that actually means for you in game. In this example, we're talking about Kiwi coming back to New Zealand account.
But are they obliged to tell you about that retail spread as well, like how much extra on top of that exchange
Not
you're going to be
necessarily.
losing?
They will just they'll say this is the public rate, and so sometimes in New Zealand for certain banks they'll have a threshold, and when the transaction amount is above that threshold they'll call through for a live market rate. So that just means it's an up-to-date rate, and so yes, there still will be retail margin, and there does need to be a certain amount of margin for those volume transactions. The pure wholesale pricing of transactions actually relate to $1 million plus transactions, and they relate to the interbank market where you've got banks dealing with banks or large corporates, etc. So it's no different from any business. What I think people are quite comfortable with is if they know what they're paying for and they know what they get, there's no surprise, and they have their expectations met.
So what's so a quick checklist for people to go through mentally, or just to
First off, just quickly check, as I said before, have a look on your own bank website in Australia. Very easy to go in and have a look under the calculators and tools functions on their websites. Do an example with the Australian bank, do an example with the New Zealand bank, and then there's also third-party providers around like HIFX, like Velocity FX. There's a couple of others out there that you can actually quickly get online and check them as well.
I think I transferred some money over online once through a third-party Forex, I believe.
Yeah.
I remember doing some research at the time, but probably didn't do quite enough research. How do you know who's authorized to do what, and what can give you any sort of assurance that that money is not going to disappear into the ether or get gouged along the way, even worse than you might be by the bank?
Well, obviously you want to be transacting with a credible party, and there are a couple of those parties. You can have a look on their websites and look for the regulatory tab. Some of them it's quite easy to find. Sometimes you might have to dig a little deeper, but the information should be there, and it should give you some peace of mind around compliance. As you said, you'd have to fill out an application form, whether that's online or in a physical hard copy. You'd have to provide some ID so that the company actually knows that you're a credible person to actually transact. So a couple of those checks and balances would help you know that those are kind of credible people to deal with.
Okay, but on the whole, though, it sounds like most people would be better off to actually get their money transferred, exchanged over here on home turf, which is a good news story for New Zealand banks.
We love that rivalry, and finally we've got another one over the Aussies.
Excellent. Fiona Whyte, thank you very much for joining me. I'm Amanda Morrall, Personal Finance Editor with Interest.co.nz, and this has been another one of our double shot interviews.